You're listening to ChartingWealth.com's daily review for the day beginning Thursday, the 14th of January, 2016. How do we always start here at Charting Wealth? We start with IYY, which is what? It is the iShares Dow Jones U.S. Total Market Fund. It's an exchange-traded fund. It tracks the whole market. And we see four big down candles, each of those candles representing 2 days worth of trading, big red down candles. We have a beautiful trend line that's connecting pretty much all four of those candles from the top. Market originally started moving down back in early December, moved down substantially, slid sideways, and then started off the year with a bang going down. Biggest down we've seen in the market for an opening of a year. So where are we? Well, if we revert back from the 2-day chart to our 4-hour or half-day chart, what do we see? We saw some sideways sliding starting on the 12th, continuing through Wednesday the 13th, and then the down move started in the afternoon on the 13th. So big move down, sideways slide day and a half before, but what we are seeing now is a continuation after we had the markets level off and digest some of those falls. Where are we? Confirmed down moves on both our small chart and our big chart. No point yet. Thought we might have a point if the markets would have gone up a little bit more in the afternoon, might have had a crossover going up, and then when the market rolled back over, could have found ourselves getting back in, but we didn't have that kind of trigger. We did not have that kind of trigger on our 4-hour chart. Now, as we revert back to our 2-hour chart and we go to SPY, what is that? Well, that is the Spider's S&P 500 Trust Series Exchange Traded Fund. It represents the S&P 500, those big companies that represent a lot of the volume. Looks very similar to the down moves that we saw on the total market because there is so much volume there. It looks similar a lot, not always the same. What do we see happening? Well, again, big down move. And just to let you know how big these down moves were, IYY and S&P were both down right at 2.5% for the day. Actually, 2.6% for the total market, 2.49% for the S&P 500. So big down moves. Now, when we look at the short chart, we can again see that we had sideways sliding for about a day and a half, starting in the morning on the 12th, extending through the morning on the 13th, and then the big push down in the afternoon. So the down movement continued. I'm just curious, if we look at our 2-hour chart, what do we see? Well, we did see a crossover in the morning going up and then a sideways slide. Again, you always want to check out different charts. The 2-hour chart, of course, is more volatile, but when you can see good patterns to trade, I'm not beholden to any charts except what? Those that work. So we'll continue to follow our charts. Now, when we look at the 2-day chart, and go into the Qs. What do we see going on there? The Qs is the NASDAQ 100. We see again a strong trend line, strong movement down on 4 candles. If we revert to our 4-hour chart, half-day chart, what do we see? Again, a real push up, getting close to a crossing over, but not quite happening. Derivative oscillators continued to lose its speed, and then the market plummeted over in the afternoon. The Qs was down, get this, 3.45%. That's a lot of down movement for a day. So again, markets have resumed on the indexes, all 3 of them, the total market, the S&P 500, and the Qs, strong down movement. Lastly, let's take a look at what gold's doing. First, we will look at, what do you think gold's doing? Going up, right? Well, we can look at our 2-day chart. And what do we have going on? Gold crossed over going up back on the 14th of December, slid sideways for a while, and then continued that up move. It banked off, violated the 2-day trend line over the last couple of days. That is on the 13th. That represents 2 days, the 11th and the 7th, and actually back on the 5th. Those 3 2-day candles showed strong up movements in gold. Gold digested some of those gains, broke the 2-day trend line, and if we explore what's going on with gold on the 4-hour chart. What do we see happening? Well, gold broke over moving up on the 4th. We talked yesterday about gold moving over, and it did break through the 4-hour trend line going down. It started to recover some of that. A big update, well, not a big update for gold, just 0.49, 0.5%. We will continue to watch, although that movement is strong. Gold still has a negative derivative oscillator, and it is down on the 4-hour chart. We'll see how gold continues to develop, because we have down movement on our MACD and our derivative oscillator. But when we look at our large chart, what do we see happening on the 2-day? It is in a confirmed up move. So again, we get a crossover going up on the 4-hour chart, and that corresponds with the up movement we have in the 2-day chart. Might be a signal for us to actually get into that trade. Let's continue to watch. And again, when we say trades, we're talking virtual trades. We are not a stock calling service. Always want to make sure we publish that caveat. We talk about it constantly, about you getting out there, learning to invest, learning to trade, learning from us. And then once you feel like you have the ability to make your own decisions, you make them. We are not a stock calling service. We're an education company. And we're happy to hear from you. Please, if you don't already have our layout, you need it. It's from freestockcharts.com, and you can get our Charting Wealth layout. You can also get our 15-minute How to Read a Stock Chart video. All this stuff is free. All you got to do, sign up for our newsletter at our website. We'll send you the video every day of our daily review. And you'll also get once a week our weekly review and forecast. We can't wait to hear from you. chartingwealth.com.